if we look across investing and we look at asset classes, you can see the government and the mainstream media would have you think the consumer inflation rate is 2%, that lower. I'm speaking in the US and the US dollar, of course. Obviously, inflation rate is much higher in Argentina. But the most important point of this is we're talking about all 8 billion people in the world, and we're talking about all the money in the world, even under the best of circumstances. This is what they're looking at. So the 2% line is the consumer inflation rate. Most of these investments and asset classes can beat the 2% inflation rate, but as you can see, they can't beat the real inflation rate, the asset inflation rate, or the money inflation rate, the rate at which money loses value against scarce desirable assets. Now, as you can see from the chart, the worst investment is a commodity. You don't want to buy oil or natural gas or lumber, because human beings are really good at producing lumber and oil and natural gas. I mean, we use machines, we use factories, we use technology. Is there anybody that doubts that we're better at making oil or gold or silver or platinum today than we were 2,000 years ago? It's kind of obvious. We just get better. And so, commodities and cash don't work. Then if you look at the average investor, they're getting 2.9% return because they're diversified. As I've said before, diversification is selling the winner to buy the loser. Your consumer home is doing a little bit better. Bonds are a little bit better. And the diversified portfolio underperforms inflation. If you look at the S&P index, it's about the same, right? You're getting 7.5% return against about a 7 to 8% inflation rate. But all you're doing is just keeping up with asset inflation. You're not beating it. The only asset classes that beat it by a little bit, REITs, real estate investment trust, it's basically real estate portfolios. And maybe you might beat it by a percentage, but there really aren't any winners here. What this tells you is that if you own the most desirable property in the middle of London or Paris or New York City, you might be able to slightly beat monetary inflation, and most investment ideas don't work. And so if you want to preserve your wealth, an investor has to convert their currency into assets. And, currency, CNY, euros, dollars, ARS, bolivars, real, etc. You have to convert them into assets that are scarce, desirable, portable, durable, and maintainable. Those are the 5 criteria that matter. And you have to evaluate every asset against that. So what is Bitcoin? Bitcoin is the most powerful digital monetary network in the world. But it is simultaneously 4 things. Bitcoin is an asset, it is a network, it is a protocol, and it is an ideology. And many people misunderstand it. They think, it's just a cryptocurrency. But I think when you start thinking about asset, network, protocol, and ideology, your eyes open. Many people say, well, Bitcoin's not backed by anything. What's it backed for? It has no intrinsic value. And they grossly misunderstand the network. Bitcoin is secured by 4 types of power: computing power, electrical power, economic power, and political power. And if you don't understand these 4 types of power, then someone's going to trick you out of your Bitcoin, or you're going to make mistakes. So for example, the computing power is 460 exahash. That's all of these millions of Bitcoin miners, custom silicon, and they are channeling 16.5 gigawatts of electrical power into 460 exahash. Now, 16.5 gigawatts is 20 basis points of the power in the world, so it's a small fraction. But 460 exahash is what makes Bitcoin truly secure, because that's all the computer power in the world. If you wanted to redirect all the computers at Google and Amazon and Microsoft and all the iPhones to do hashing of Bitcoin, they're probably not going to generate 460 exahash. So it's the custom silicon which converts electrical power into computer power, and they're both important. Arguably, it's a lot easier to come up with 16 gigawatts than 460 exahash because all the hash power is owned by the Bitcoin companies that are securing the network. Now, to put this in perspective, 16.5 gigawatts is more power than the energy used to propel the entire United States Navy. All of the aircraft carriers, all the destroyers, all the ballistic subs, the entire Navy runs on a bit less than 16.5 gigawatts. So that's a lot of power. 460 exahash is all the computer power anybody else can muster. But that's not the only thing. Bitcoin's secured by economic power. And if you look at the 4-year simple moving average of Bitcoin, and then you look at the supply, you conclude about $560 billion have been invested in, the M is wrong, it's $560 billion have been invested in this network. And so that money secures the network. And you got to expect that the people that invested the $560 billion are going to protect it using all of their resources and influence.
Hey, money talkers, grab your moon boots because the crypto cosmos is buzzing with jaw-dropping news. And you're watching Money Talks, where the crypto roller coaster never stops. Today, we got Musk's mind-blowing ad prophecy, Bitcoin blasting off to new highs, and FTX's SHIB shuffle. Let's dive into the stellar whirlwind. Hold on to your cyber hats, space rebels. Elon Musk, the kingpin of innovation, just dropped a bomb at the DealBook Summit. Musk predicts AGI, artificial general intelligence, smarter than your genius friend, hitting the scene in less than 3 years. Picture this. AGI writing novels like J.K. Rowling and unveiling new physics. The X community, some are thrilled. Others are skeptically sipping their digital tea. Get ready for an eye roller coaster. Bitcoin, the OG of crypto, is on a cosmic joyride. Over $41,000 and counting, Max Keiser, our crypto fortune teller, sees a new all-time high on the horizon, a staggering $220,000 in play. Galaxy Digital CEO Mike Novogratz joins the party, hinting at $69,000 with ETF approval. We're in for a crypto meteor shower. FTX, the crypto maestro, is making waves. In a crypto shuffle worth $22 million, they're moving 77.77 billion SHIB, among other goodies. The FTX saga continues as they convert assets to fiat. SHIB's dance. A small rise during a shuffle, followed by a 5.68% leap in 24 hours. FTX, the conductor of the crypto orchestra. Hold on to your seats, thrill seekers. Bloomberg's crystal ball sees Bitcoin hitting $500,000. The parabolic run has BTC breaking barriers, reaching over $42,000. Experts are in a frenzy, tossing predictions from $50,000 to $500,000. But isn't a pipe dream without a massive liquidity boost? Meanwhile, the buzz around a spot Bitcoin ETF is the secret sauce, attracting heavyweights like BlackRock and Fidelity. XSEC, the crypto world is waiting for your nod. And there you have it, crypto mavericks. Musk's eye revelation, Bitcoin's interstellar ascent, and FTX's SAIB shuffle. It's a wild ride in the crypto galaxy. Let's continue our discussion with Michael Saylor.
And then finally, you've got about 220 million holders. 220 million people have some ownership of Bitcoin. And those 220 million people, they're also going to use their political influence to protect the network. And so when you're investing in Bitcoin, you're protected by 4 types of power. Now, how does this compare to everything else you can buy on that chart? Well, you could think of Bitcoin as the apex commodity. The top competitor would be gold, worth $10 trillion. And if Bitcoin's digital gold, it's better than gold. And it's better than gold because it's got an absolute supply cap. The production is rapidly approaching zero. You know, after 2035, there effectively isn't any material new production of Bitcoin for the next 100 years. And that means we're totally capped. And so people compare Bitcoin to gold, but Bitcoin is gold without the liabilities and the risks of gold. It's kind of pharmaceutical grade gold. Gold is going to have systemic inflation. Miners are going to make more gold. It's hard to audit. It's very difficult to transfer. It's expensive to custody. It's very expensive to authenticate. Those are all the liabilities of gold. We know about that. The reason we know it doesn't work is because gold has not been appreciating in value for quite a while now. Now, Bitcoin solves that problem, but it enhances gold with digital audit, digital transfer, digital custody. decentralized robustness, integrity. It's got a global utility and appeal. And the technology industry is enhancing the value of Bitcoin. One day you'll see every smartphone in the world will have support for Bitcoin built into it. And even right now, you can download dozens of apps that handle Bitcoin. And so you can't download any app that moves gold around. And that's why Bitcoin is the apex commodity. It's just better than gold.
If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.